Welcome to today's deep dive. We are jumping into some very specific tax data today.
We also have some crucial industry briefings for 2026 to review.
Right. And our entire mission today is pretty straightforward. We want to prepare you to use Section 179 properly.
Exactly. We're talking about turning your next heavy equipment purchase into a massive tax refund.
And getting that refund in the exact same year. But I want to be totally honest for a second. Most crews out there have never even heard of this tax code.
No, they definitely have not. It is a huge blind spot.
Right. They just operate for years completely in the dark. Or they finally hear about it from their accountant in February.
Oh, yeah. The February phone call.
Yeah, exactly. And by February, the window is completely shut. It is just too late. You miss the deadline entirely.
It is so frustrating. You are out there working hard every single day, and finding out you missed a huge deduction really hurts.
It hurts a lot. You just did not have the right information.
Well, we need to reframe that entire situation right now because this tax deduction is incredibly real.
But there is a hard deadline.
Yes. The deadline is December 31st. You must act before the year ends.
Okay, but let's look at the reality for a typical operator. Heavy equipment is incredibly expensive right now.
It definitely is. Prices are up everywhere.
And not every crew has a ton of cash just sitting around. I mean, a lot of them are
I
strapped.
bet it is the real secret here. Financing makes this entire strategy possible without using your own cash.
Wait, so you do not need cash up front?
No, not at all. You just need the right capital at the right time.
Okay, let's look at the actual numbers. You know the December 31 deadline now.
Right. Now you need to understand the potential scale of this program.
Because the numbers are huge.
Right.
What are the official limits for 2026?
Well, for 2026, the maximum deduction is $2,560,000.
Wait. Over $2.5 million.
Yeah, it is massive, and that applies directly to qualifying equipment.
That is a staggering amount of money. Is there any sort of ceiling to this program?
Yes, there is a cap. The phase-out begins at $4,090,000.
Okay, I see.
So once you hit that spending number, the deduction starts to shrink.
Okay, I hear those huge millions. But let's be super practical here. What does this mean for a regular crew?
That is a very fair question. Let's look at a very standard example. Say you decide to buy an $80,000 mower.
Just a standard heavy-duty commercial unit.
Exactly. Under this rule, that $80,000 mower equals an $80,000 deduction.
So it is a direct match.
Yes. Let's do the math on that.
Yeah.
Assume your business operates in a 30% tax bracket.
Okay, 30%.
You get $24,000 back. The IRS literally pays you to upgrade your equipment.
Getting paid to upgrade sounds almost too easy. I mean, there have to be a catch. Where do operators usually mess this up?
Well, it always comes down to three very specific words.
What are the words?
Placed in service. This is the ultimate trap for business owners.
Placed in service. What does that actually mean in the real world?
It means simply buying the equipment does not count at all.
Wait, really?
Yeah. And paying for it in full does not count either.
So having a receipt means nothing.
A receipt is totally useless for this tax rule. The equipment must be physically delivered, it must be installed,
Okay.
and it must be completely ready for use by December 31.
Oh, wow. Treasury data on this is actually fascinating. They say 60 to 80% of eligible firms claim this deduction successfully.
Which is a good number, but a huge chunk misses out completely.
Right. Because their shiny new mower arrived on January 4th.
Exactly. They missed the entire tax year by 4 days. They ordered late, and supply chain issues delayed the delivery.
That is a painful mistake. So what is the winning timeline to avoid that?
The timeline is simple. Order in October. Deliver in November. Deduct in April.
Order in October, deliver in November, deduct in April. I like that.
You control the timeline. You never want to panic in December.
Okay, you have the timeline down perfectly. But let's go back to the cost. I have to ask the question every single operator is thinking right now.
Go right ahead.
Do you really need cash up front to pull this off?
I will answer that very clearly. No. Equipment financing absolutely qualifies for the deduction.
I just want to make sure I completely understand this mechanism. I can just finance it.
Yes. You finance the mower. You make a very small first payment.
Like maybe a couple $1,000s?
Exactly. Just your standard initial payment. But here is the tax magic. You still deduct the full $80,000.
Wait, the full $80,000, even though I only paid $2,000 so far.
Yes. That full amount counts against this year's income.
That is wild. I totally get why operators call it the smartest move in the tax code.
It really is. Your financing payments are spread over 5 to 7 years, but the massive tax refund hits your account in April.
So you get all that cash back immediately.
Yes. Financing is definitely the key here, but you need to unlock the best rates to make it really work.
Right. Rates matter a lot. What is the target revenue operators should aim for?
$20,000 monthly is the target.
Why 20,000?
That is the revenue threshold where premium equipment rates open up. Lenders love seeing that number.
Okay, but I have to be a skeptic for a minute. What happens if a crew is below that number right now?
I will be completely honest with you. Financing still works at $10,000 monthly.
But there is a catch, right?
Yes. The rates definitely climb higher. And the personal guarantees also expand significantly.
Which nobody wants. Putting your personal assets on the line is stressful.
Very stressful. But I have a 30-day fix list. This pulls your bank statements up fast.
Oh, a fixed list. What is the first step?
First, you must get a dedicated business checking account.
Stop mixing personal and business money.
Exactly. Then you must stop all overdrafts. 0 overdrafts allowed.
Lenders must hate overdrafts.
They despise them. It looks like a cash flow crisis. Third, you need to pay revolving cards below 30% utilization.
Keep the credit card debt looking manageable.
Yes. If you do those 3 things, you transform your profile. 3 months of clean $20,000 statements completely changes the offer.
Okay, so your statements are finally clean. You hit the revenue targets. Now you need to prepare your application package.
Right. And you need 5 specific documents for this.
Just 5. Let's go through them. What is the first one?
Number 1, 3 months of business bank statements. And these must show $20,000 plus in deposits.
Proving you actually make the money you claim to make.
Exactly. Number 2 is your most recent business tax return.
Very standard.
Number 3, a driver license matching the application perfectly.
The names and addresses have to align exactly right.
Yes, perfect alignment. Number 4 is a void check from your operating account.
So they know where to send the funds.
Right. And number 5 is crucial. It is the equipment quote from your dealer.
Does it need anything specific on it?
Yes. This quote must include the exact model number. And it must include the delivery date.
Ah, the delivery date.
Yeah.
Because of the placed in service rule.
Exactly. They need to know you will meet the deadline.
What kills these approvals? Like, what makes a lender just reject you instantly?
Negative balances will kill it quickly. Overdrafts kill it. Mixed personal and business banking is a huge red flag.
What about the quote itself?
Vague dealer quotes will completely stop the process. Lenders need details.
Okay, so you have your perfect documents ready. When is the exact right moment to actually hit send on the application?
Let's walk through the ideal calendar. We use a strategy called sunshining.
Sunshining. I like the sound of that. How does it work?
You apply in May, you get approved in June,
Okay.
you order in October, you deliver in November, and you deduct in April.
Applying in May feels really early for a December deadline.
It is early, but applying in a panic in mid-December is a huge mistake.
Why is it so bad? People do it all the time.
Because rates climb rapidly during a panic. Lenders know you are desperate.
So they take advantage of the rush?
Yes, terms shorten significantly, and lenders demand much stricter personal guarantees.
It makes sense. If you apply in December, it looks like you have no plan.
Exactly. Sunshining's the opposite. Apply at your peak performance in the spring.
When your cash flow looks incredible.
Right. Then deduct at year-end and get your refund in spring.
That timing strategy clearly requires some discipline.
It really does. But the payoff makes that discipline completely worthwhile.
I mean, getting $24,000 back is a huge motivator.
I want you to picture the timeline. Picture February. Your accountant runs the tax return.
They lock in the Section 179 deduction.
Yes. Now picture March. The IRS confirms your return is processed.
The money is on the way.
Exactly. Picture April 15th. $24,000 hits your operating account.
That is just incredible to visualize. Picture the crew bonuses you can pay out.
Oh, yeah. Picture next season's parts inventory completely covered.
It totally changes how you operate in the spring.
The equipment pays for itself. It pays through daily use in the field. And it pays through huge tax savings.
You get a physical asset and a cash injection at the exact same time.
Yeah.
I absolutely concede the point. The math works perfectly.
It is a game changer for crews who use it right.
Well, the math works. The timing is clear. The next step is entirely up to you.
Yes, it is action time.
So who should actually pre-qualify today? Who is the perfect fit right now?
I will be very direct. Are you at $20,000 monthly or higher right now?
Let's say yes.
And are you holding off on buying equipment?
Lots of people are holding off.
Then this is your absolute window. You need to act.
What about the middle tier? The crews sitting between 10 and 20,000 a month.
Spend 30 days on those clean statements, fix the overdrafts, then you can pre-qualify.
And what about the smaller operations? The lower tier below 10,000.
Focus on growing the top line first. Use the peak season to get your revenue up.
Makes sense. For the ones ready to go right now, where is the resource?
The free 2-minute form lives at BusinessLoan.Directory.
So just go to the site.
Yes, and it is incredibly safe. It is just a soft credit pull.
Which means it does not hurt your credit score.
Right. Lenders never do a hard pull for this initial check.
That is great. Plus, a no-cost funding advisor from this commercial finance marketplace walks every offer with you.
Exactly. You do not have to figure it out alone.
They review the terms and help you out.
Yes. And I want to leave you with a final provocative thought today.
Oh, I love a good final thought. What is it?
Private equity firms are aggressively buying up crews right now in this sector.
Oh, wow. I have seen some headlines about that.
It is happening everywhere. And they look very closely at your cash flow. They also look at your modern equipment.
So having a brand new fleet makes a difference.
A huge difference. Upgrading your fleet with someone else's money makes your business highly attractive to buyers.
Because the business looks modern and fully equipped.
Right. You get the right capital at the right time, and you build massive equity.
It is just incredibly smart business.
It really is. Get your pre-qualification done and take control of your taxes this year.